Okay, so permit me to start afresh because I was trying to record the class. So I said project procurement management is a combination of both procurement and contract management, because most often when we talk about project management, it's often to us like we're just talking about procurement only. And that's what some of us actually understand by project management. If it is not contract, then it's not a project. All right. So how then do we create this a better understanding of what procurement is and how is procurement a part of project management? Okay. And like I said, to some of us, this class will be like a reminder. To some others, this will be absolutely new to us. And then to some others, it's just going to be like a checklist to find out how or why our projects might not be going the way we want them to go. Now, by the end of this class, participants will be able to explain project procurement processes, plan procurement activities, conduct procurement activities, and then control procurement activities. Now, the introductory part of this class is going to be a little longer than usual. So please, let's all pay attention, because it's like the introduction or the fundamental is more important than the bigger ones we'll talk on later on. So let's pay attention to these fundamentals, because if we get the fundamentals, then talking about the advanced part will be a little easier for us. Project procurement management includes the processes necessary to purchase or acquire products, services, or results needed from outside the project team. Please, there are some key things I would like us to get here. Now, the procurement management deals with procurement or purchase or acquisition of products, services, or results needed from outside of the project team. So it is not the project team that is responsible for project procurement, but they are to define the policies, the standards, and the procedures for which procurement should be conducted. Now, procurement management or contract management from internal dimension is where the organizational process assets, that's policies, procedures, systems for procurement gets to be defined, well defined by the contracting organization. All right. Now, project procurement management includes the management and control processes required to develop and administer agreements such as contracts, purchase orders, memoranda of agreements, or internal service level agreements. Now, I want to ask a question sincerely. How many of us here have carried out projects, whether big, small, or whichever level, that you carried out projects and you never bothered about project control documents or project documents? Like you didn't bother about project charter, you didn't bother about award letter, you didn't bother about agreements or what have you. If you've ever found yourself that the company just told you, just go and start. After the stakeholder meeting, there was no legal document that binded the project. Maybe there had been no issue, or maybe there had been issue, but you've had such experience before. Can you please type 1 in the chat room? You've had such issue where you did a project without any memorandum of agreement or purchase orders or award letters. You just went ahead and did what they asked you to do, whether it was a legal or whether it was a formal contract or an informal contract. Okay, so we have some people here who have experienced such. And for those of us that have not experienced such, the truth is all of us here have experienced such. All of us. We've done contracts that we didn't bother about service agreements or what have you. For instance, we are leaving the house and your wife told you, or your husband told you, please, can you help me buy so as you're coming back, and gives you money. There was no agreement of any kind on cost of logistics or what have you. What if I didn't buy it? What will happen? There was no memorandum of agreement, okay, on what was done. Some of us, when we went to send our children to school, okay, we didn't bother about we didn't bother to read about school philosophy, school terms and conditions, and all of that. Even when we are given the booklet, we don't bother about reading them. We just entered into such agreement without. Okay, let me even ask those of us that are married here, how many of you had contract terms and conditions with your wife before you now move to the main project called marriage? How many of us ever did that? I would trust that maybe 99.99% of us didn't do it. But we found ourselves in the contract. Okay? We found ourselves in the contract. So procurement or perhaps contract is what we carry out on daily basis. We carry out projects. Like the way we carry out projects on daily basis, be it formal or informal, the same way we carry out procurement on daily basis. Okay? There is no family here represented that does not buy things. Sit down, plan on what should be bought, how it should be bought, when it will be bought, who buys it, how much is required to buy. There is no family represented here that does not do such things. Okay. And let me ask officially now, how many of us, when we go to market to buy things, that when you're done, you ask the seller to give you a receipt? How many of us do that? If you do that, type yes in the chat room. For everything you buy, you request for yes receipt. Or sometimes you just ignore some, even receipt on toothpaste and toothbrush, you request. So that means the contract can be formal or informal. We can always have the consciousness of planning for contract, or we can do it involuntarily. Oh, we needed brush, and just stop by and bought brush. Oh, Junior said he needed the socks, and you stopped by and bought the socks, and you didn't bother about service level agreement, refund policy, or all of that. Nobody bothered about that. Okay. Okay, now let me ask another question, because all of these things, we do them on daily basis. All right. Okay, how many of us, for once, you bought something, and on reaching home, you found out that what you bought was not going to serve for the purpose for which you bought it, and then you returned it, and the person you bought it from, or the place you bought it from, said, sorry, we don't accept returns. We don't accept return goods. Has anyone ever had such experience? If you've ever had such experience, type 11 in the chat room. If not, type 00. That you bought something, unfortunately, it wasn't going to serve for the purpose, and then you try to return it back, and then they told you, sorry, we don't accept this. Okay, so if you've ever had such experience before, type 11. If you've never had such experience before, just type 00. Okay, so some people have had the experience before. Personally, I've had the experience not once, not twice. Okay, I remember the first time I had to buy a projector online. I bought a projector online from Jumia, and they dispatched the projector to us, but we tried using the projector. The projector is even better. You use a flat screen television, okay, than to use the projector. Now, one of the reasons why we can't return those things is because there was no service level agreement. There was no refund or return policy binding us with those people who are trying to return this. Now, anyone that decides to accept and maybe change it for you, maybe could be based on customer service, but most often, those people who buy things from on the street, they don't really care about how you feel after you've went home with the product and then you are back again. They will tell you, no, who knows what you've done with the product. Let it not be that when I put it on my market will stop selling, or you will take everything in my market, it will follow you to your house. Okay, so it's important. Why I'm actually raising all these things is it's important for every contract you're going into, please, let there be award letters written in black and white from today, please note, When I talk about contract, I know you understand the one I'm talking about. I'm not talking of when your wife or husband say, please help me buy a recharge card. You say, let's write it down. How much recharge card? When? Where? Cost of logistics. That's not the one I'm talking about. I'm talking about formal contracts, right? So when you're going to formal contracts, please, it's good you have some sort of agreement written down, award letters, levels of agreement. If it's going to be internal service, then it needs to be written down. Service level agreement for services need to be written down. Apart from the contract letters, which in some cases will involve the service level that should be provided. In some cases, if the service level is not in the award letter, if the award letter only stated the contracts, how much due time and all of that, and did not state the service levels, please, it's good. The service level should be initiated. Let's take, for instance, in this class, before you come in, it will tell you some service level agreement, which you must agree with. If you don't agree with it, you can't be here. Okay, and one of the service level is that the training is free, but for you to access the study material, the examination, and what is again, and certificate, you need to pay for them. That's a service level agreement. That means for you to expect study material, you need to pay for it. For you to expect examination, you need to pay for it. For you to expect certification, you need to pay for it. Okay, and also in the service level, we'll tell you that there are 2 levels of certification. If you want the certification issued with IPM, the cost is different. If you want a certification from any of our accrediting bodies, maybe CIMC USA or any other of our accrediting bodies, then their own fee is different. You also get to know that. All right, so a service level agreement, memorandum of agreement, and all of those purchase orders, having a list. Sometimes it might not be a formal document like we have to inform you that this contract has. No, it might not be that. It might just be a purchase record from your department that has stated everything that needs to be purchased, like what they call is it pro forma invoice. Okay, you write everything down and then it is signed by either the storekeeper or the procurement officer or the department head responsible for procurement. As soon as it's signed, the photocopy is kept with the organization and the copy is given to the procuring organization, and then things get to be done. Now listen, the personnel authorized to produce the goods and or service required for the project may be members of the project team, management, or part of the organization's purchasing department, if applicable. Now, notice that in the definition of project procurement, we said is the processes necessary to purchase or acquire products, services, or results needed from outside. Those resources, those products, those resources are outside of the project team. But that does not mean that we cannot use members of the project team to acquire those resources that are outside of the project team. I hope you're getting it. Because in contract management, we have internal sources of contract and we have external sources of contract. Most often, before organizations will come out to start looking for external sources, they would have examined all the internal opportunities. And if the internal opportunities are not available, they can now go to external sources. All right? Okay. Project procurement management processes include the following. Number 1, planned procurement management, which is the process of documenting project procurement decisions, specifying the approach and identifying potential sellers. Then number 2, conducting procurements, the process of obtaining seller responses, selecting the seller, and awarding a contract. In this case, the person we are calling the seller here is the one we are referring to as the contractor. All right, the contractor, that's the performing organization. All right. Now, controlled procurement, that's number 3, where we have the process of managing procurement relationships, monitoring contract program performance, making changes and corrections as appropriate, and closing out the contracts. The procurement processes are presented as discrete processes with defined interfaces. The procurement processes are presented as discrete as far as the project management plan is completed or the agreement has been made on conducting a project or implementing a project, the procurement should be discrete. When you are making budget, please note, because we have that tendency of lapping everything together. Please note, there are important resources. Let's go back a little. There are important product, services, or results that must be gotten for the project to kickstart. So those resources, those products that will be needed, they should be part of your procurement. But that does not mean that when you're developing a project, maybe quality management, there could be some sort of cost that will come by when coming up with quality. There could be cost attributed to risk, cost attributed to communications. Now, those costs, they might not be procurement cost as it were, but we have to make discrete all of the costs. So if you're going to be saying cost of purchase of this, you put that down. If you are going to buy communication equipment, then it's going to become procurement. But the procurement is going to be under communications management. You're going to be having procurement of resources for risk management, maybe equipment or software for it. They're going to have that procurement under its own category of procurement under risk or department of risk. So you have to make each one discrete. Okay, each of the procurement plans should be discrete. Now, another thing you may also have to put into consideration is that the person that is responsible for procurement or communication matters might not be as knowledgeable as the person, or might not even have interest, or might not even provide services as procurement on human resources. And the person handling human resources might not even have interest on procurement that may have to do with the materials needed for the project. And the person that is responsible for materials might also not be interested in evaluation, the person who is interested in project evaluation and the like. So each of these need to be in different categories. Now, there is something I want to show us. Okay, there is something I want to show us. Let me see where I kept that document so that we can understand what I'm saying. When organizations are planning for contracts, they plan them on different categories. All right. Let me see whether I will find that document. Then I will share with us. I got that document from one of these organizations. So let me see. It's a complete contract document. Just a moment, I will be with us. Let me just see if I can get it. If I get it. If you default, there will be problem. Okay, someone says my screen is not moving, so let me. Okay. So talking about the key concept for project procurement, I said number one, there could be significant legal obligations and penalties tied to the procurement process. The project manager, please listen, does not have to be a trained expert in procurement management laws and regulations, but should be familiar enough with the procurement process to make intelligent decisions regarding contracts and contractual relationships. Now, in this class, we are not going to be teaching procurement management laws and regulations. So those ones are outside of the boundaries of this class, but the ones that apply to us, we try to teach them, right? Even when we are going to be talking about bidding and bidding documents, we might not be specific to any country, all right? But in subsequent classes or subsequent workshop where we now talk about procurement and contract as different, as a whole, then we can now be specific to countries, especially Nigeria context, all right? So, but as a project manager, you need to be much more interested in the procurement processes, all right? Not in the laws as the case may be, but it's also good that you acquaint yourself with the laws. It's obvious that you might not be the one doing the procurement, but it's good you understand the laws governing the people doing the procurement. All right. The project manager is typically not authorized to sign legal agreements binding the organization. This is reserved for those who have the authority to do so. And who are those who have authority to do so? Those in the legal practice, those in the legal department. They are those that have the right to sign off binding document. And that's why you have the project management office. The project management office harbors the project team. The project team is just a subset of the project management office. So the project management officer, in most cases, is advisable to be a legal practitioner or someone that has legal understanding, or a secretary, an accredited secretary, or an accredited management consultant. These are some of the people who have the right to sign binding document. Accredited secretaries, accredited legal practitioners, accredited management consultants, accredited auditors, accredited accountants, okay, chartered accountants, or like these people have those legal authority to sign legal documents. All right. The project procurement management process involves agreements that describe the relationship between two parties, a buyer and a seller. A buyer, which is the contracting organization, the seller, which is the performing organization. Agreements can be as simple as the purchase of identified quantity of labor hours at the specified labor rate, which is for HR people, or they can be as complex as multi-year international construction contracts, which is for civil people. And how many of us know that you don't need to be an engineer to secure civil contracts or secure, in fact, you don't even need to be an engineer to secure contracts, whether they are civil, non-civil, all right? All you need to do is to have the people that have the requirements to help you secure the contracts, right? That's what we're talking about. Because most often, some of us are project managers, we are limited in our scope of reasoning, okay? I said something when we were either the third week or the fourth week of this class. And I said, by the end of this class, every one of us should look at the economy very well and then decide what kind of contracts we should be willing to undertake. That will inform you of the kind of companies you should be registering for. Did you get what I just said now? Look at the economy. We made mention here that as much as possible, try to get the national budget for the year. And then for those organizations or ministries or parastatals that you're interested in providing services to, please try as much as you can to get their expression of request letters or request for expression of interest information. Get to have those things so that you can have your own cut of the national cake. And I said it is important that all of us start looking at registering companies that will create values, serve values, all right? Create and serve values. So in case you're in this class, you are working for an organization, then you go and start looking at the capacities your organization has to deliver on national projects, international projects, and then the requirements needed to deliver on such, and then start working on your contract documents, your bidding documents, so as to be able to meet up with those things, right? And then if you're an individual that you're not working for an organization, then start thinking of creating a company and start working on it. There was a particular class I held, was it in May last year or so? A particular young man was, every time he writes to me, he will say, sir, please remember, I'm looking for a job in oil and gas, energy, oil and gas. He kept writing. I said, no problem. And in the class, I said to them, there are several contracts in oil and gas. It is easier to invade a company as a legal entity or as a corporate entity than going there as an individual saying you are looking for a job. Most often, nobody will respond to you. But if you're going as a corporate entity, you come up with your letter of introduction, have your company profile, and you're ready to pick up contracts. People are much more willing, organizations are much more willing to listen to you. So instead of every day looking for oil and gas job, why don't you develop a company that is to serve oil and gas and then look out for projects in those areas? I am not saying that automatically by having a company profile or by raising a company, just get a contract all of a sudden. That's not what I'm saying. But just like one of those directors told me, he said, if this company gives you a contract, it can last you for 10 years. Is it not better off if you're going to take 1, 2, 3 months or 1, 2, 3 years to get it? Just get it. You're not going to die. My people will say that hunger does not kill a man. It only makes the man's head to swell up. And then when you get money and start eating up, your head and your body balance up. That's what my people believe about hunger. Hunger doesn't kill a man. It only makes your head to swell up. Then that swelling head, when you now, at the end of the day, you now get money and start eating up. Your head will not still reduce anyway, but your body will now work to meet up with your head. And then you become balanced. So am I saying that if you need a job, you shouldn't ask for one? No, I'm not saying you shouldn't ask for one. Okay, but it is important we start looking at the bigger picture than always focusing on the smaller picture. All right, any day, anytime, if you ask me, I will tell you to find a way, build a company, search out for contracts, bid on those contracts, bid for those contracts. If you have a contract that pays you 50 million naira and it costed you 10 million naira to do it, you go and buy a house in Lekki. You stop being a, what they call it again? What they call it now? A tenant. You bid for a project of 1 billion and the project was going to cost you maybe 600 million to execute. Bros, the remaining 400 million is for you and your family and maybe for those people you want to help. There is no amount of salary that can pay you 1 billion naira. Well, let me not say, but I doubt if it's possible in Nigeria. Even the most highly paid people in Nigeria, they are still earning in millions. Okay, I've not seen anyone earn in billion just on a slot. I've not seen. From the record we've seen, they are still earning in millions. And most of them, I don't think there is any, I think the highest is 300 plus million and downwards. Okay, so let's expand our thinking horizon and then get better with these things we are discussing here. All right. Am I saying that by the end of this class, you go and leave your organization and start, that's not what I'm saying. No, I am not saying so. What I'm saying is if you're currently in an organization, some of us, the organization that brought us here, go back and start looking at how to expand your capacity to serve as contractors. That's what I'm trying to say. If you are an individual, you've not been doing something on your own, then you can go ahead and start registering companies, whether it is business name or limited liability or joint ventures or public limited, that one is your concern, but start from somewhere. Or perhaps you already have a company, but you've not really looked at the greater opportunities associated to your side of company. Then it's important to start looking at it. And please, if you've not registered a company and you have intention of registering a company, please always seek for legal advice before you proceed. Because some of the things we enclose in our memorandum of association or article of association, sometimes they disqualify us from pursuing some contracts. So we may end up going back to CAC and then reviewing those articles of association or registering a new company entirely, which might not serve a better purpose. Just going to and front might not do the right work. So best thing is get a legal advisor to put you through on how to develop your articles of association. If you're looking at international contracts, tell the lawyer, let him know. If you're looking at both local and international contracts, then let him know. If you're looking at serving businesses, then let him know. If you're looking at serving individuals, let the person know so that they can guide you, all right, on how to go. Very, very important. And I will recommend, before you start registering your company, if you want to become a national contractor or international contractor, please start looking out for what organizations are really willing to contract out. Okay, what are those things organizations are willing to contract out? Okay, start looking at them and then look at your own capacity. and then find out which areas you think should be much more comfortable for you, and then go to those areas. Tell your lawyer, this is the area I think I want to leverage on, and then by the time you have your legal document and you get all the compliance certifications, you are almost 90% to getting a contract, and I'm not joking. Other discussions, we'll do them as we proceed. All right, so I have Dickin. His hand is up. Dickin, kindly unmute. Let's hear from you.
Hello, afternoon, sir.
Yes, welcome, sir.
I just want to add my voice to what you are saying.
Okay.
Many of us, this advice is, so most times is rare, and sometimes it is difficult for people in the working class to always understand because of the, maybe I will call it salary mentality, or the fear of the unknown. So because most times the people working, most people are all
right. Thank you so much, sir, for lending a voice. Okay, so that is from one of us. So importantly, all of the things we are saying is just to broaden our horizon and start thinking out of the box. You see, sometimes when I speak like this, some people feel like I'm digressing from the class, and but I remember a particular training I was having, and I was speaking on this, and it was an internal training. So most of these things, we don't say them in internal training. So the CEO of the company called me and says, the things you're saying, they are wonderful and all of that, but these people, they are internal to us. We don't want them to go. So somehow, there are things your CEOs may not want you to know, not because they don't really want you to know, but they're afraid that if you know them, you will run away from them. Okay, but in this case now, we are telling you, don't run away from them, rather collaborate with them and make sure they get the work done. All right, so I have another hand up from Mr. Solomon. Please kindly unmute, let's hear from you.
Thank you very much, sir. I want to appreciate you immensely for your contribution.
Thank you.
Yeah, for some, it might look like you are digressing from the point, but no, you are not digressing. You are not digressing. You are actually, positioning us for, better opportunities. You are opening our eyes to what we can do. For instance, I work in a public sector, one of the parastatals in the federal government.
Okay.
And I've been thinking, it's an organization where you grow gradually. It's a big organization.
Okay.
Of course, I can't mention the name. So I've been thinking, before I get 1 or 2 promotions and start doing well financially, what else can I do that will give me money? So currently, I've identified 2 things which I want to engage my wife because of, the way Nigeria system is organized. You cannot own a business while you're a federal government staff and all that. So I'm setting up 2, good organizations, which I have the experience before joining this, where I am now. And quite insightful, your class is organized. You are super. I just want to say thank you. Thank you for encouraging us. Thank you for opening our eyes. God bless you.
Thank you so much, sir. We really appreciate that. Thank you for lending your voice. Okay, so Mr. Solomon said he's working in a federal parastatal. And the question is, I know some of us here that are federal parastatal. You don't need to mention your name, all right? Now, how most of these parastatal, every year, your parastatal has their budget, and the budget has series of contracts. You don't need to be the owner of the company. What you can do is to become what we call a facilitator. But in this case, not, how will I put it now? You make recommendations. That's what I mean. Okay, you make recommendations. Let's take, for instance, you have contracts on training, or your organization has training contracts. And you say, okay, let me partner with IIPM. Let them come and bid for this contract. I will provide them with all information they need. So when is the contract? How are they going to write the letter? What are the major things that need? You provide the information. Now, remember there is agreement. You sign an agreement with those organizations you want to partner with. For every contract that comes in, you're giving me 5%, 7%, 10%, as the case may be. And then you facilitate it while the organization, if they get the contract, conduct the whole contract issues and then pay you your own, what do you call it? Pay you your own commission. Now, in the federal parastatal, yes, you're not permitted to own a company while working, but you can serve as an advisor to companies. So if you want to be a facilitator, you can ask the company to give you a letter engaging you as an advisor. And by advisory, you are not being paid, okay? You are just there to advise them, and nobody has the right to deny you the right to advise anybody, all right? So you are not to be on payroll, but that position of advisor can help you facilitate opportunities for companies that you are serving in their board as advisor. Okay, like in IPM, we have 1 or 2 professors, 1 or 2 academic doctors who serve in our board as advisors, but we cannot say they are our employees. They're only advisors. Okay, and they help in facilitating some things. Okay, and we also have some people in ministries, MDAs that help facilitate some things for us. They are not our staff, but obviously they are part of our advisors. So if tomorrow IBM wakes up and say, "Who are your advisors?" we have 1 or 2 people to call, and it's very, very important. So if you are in an agency, or less generally you are working in an MDA, please look out for 1 or 2 companies you can serve as the advisor, and then have some levels of agreement. Okay, the contract letter, what they call it now, the nomination letter they will give you as an advisor should contain some of the provisions for you as an advisor. All right. Thank you. Hope what I said now is understandable. Hope what I said now. If what I said is understandable, please type yes in the chat room. If it is not, type no. I mean, the last statement I made now regarding MDAs, if it is understandable, type yes. If it is not, type no. And that's why we are taking the time to build this community, because there are some of us that they are the opportunities themselves. There are some of us here now that only you are an opportunity. Then there are some of us that we are the doers. We are not in our own opportunity, but we are the doers. So when opportunity meets with the doer, it gets very simple. All right, that's why we are trying to harmonize all of these things together. All right, all of these things, let's do them together. And then everybody gets to have some sort of financial freedom at the end of the day. All right. Okay, thank you so much for understanding me. Please remember, I said I may have to be slow in this particular class because of the intricacies involved. Please permit me. Agreement can be simple as the purchase of a defined quantity of labor hours at specified labor rate, or they can be as complex as multi-year international construction. The contracting approach and the contract itself should reflect simplicity or complexity of the deliverables or required effort, and should be written in a manner that complies with local, national, and international laws regarding contracts. Every contract has their own local, national, and international laws that goes with them. For instance, in Nigeria, part of your contract document, if you're coming in as a contractor and you want to bid, part of your contract document, apart from your CAC documents, your registration document, your CAC Form 2 and Form 7, and then your article of association, you need other documents. I'm talking about corporately now. You will need your tax clearance. First of all, you will need your VAT registration certificate. You will need your VAT clearance certificate. Then you will need your tax clearance certificate for company income tax. Okay, you need your company income tax. And please, this thing I'm saying now, please take it very carefully. We are done with project cost management. And I said something there. I said, when we get to project procurement, there are some things we'll look at that will also affect the project cost. Now, if you are going for if your company has VAT registration certificate, obviously what it simply means that you have been legally empowered to collect VAT for the federal government of Nigeria or for your own country, right? It therefore means that when you're working out project cost estimate, you need to include VAT in it. So the company that is contracting the job to you or the project to you pays the VAT, but your company, your own company pays the company income tax. So why the contracting organization is paying 7.5% VAT as Nigeria is concerned, your company is paying 10% income, 10% income tax. Now, listen to this also. Income tax is on the profit. VAT is on the award fee. The total award fee is your VAT is calculated on total award fee. Your income tax is calculated on your profit. After project execution, the income tax, you put it on the profit. Okay, that's very, very important. After you might have done everything, you deduce tax. And then also notice, you have another kind of tax that you pay, which is the employee tax. All right, you pay your employee tax. Now, your employee tax, in fact, the total tax you're expected to pay, apart from VAT, you're expected to pay up to 30% tax. You have your company income tax, you have your withholding tax, and then you have your employee personal income tax, which you are supposed to deduce from their salary and pay to PENCOM. That's pension commission, right? I'm using Nigeria as a case, please. You're to deduce that and pay that to pension commission. Now, listen carefully, where these things are very, very important. You cannot bid for any national contract or state contract without the clearance of your VAT. No, you can get VAT. If you're not registered for VAT, you can get VAT off. But you see, tax clearance, your income tax must be stated. Your PENCOM, you must have the PENCOM certificate. All right. Then there is another one they call the social insurance scheme. Social insurance scheme, which is from the National Social Insurance Trust Fund. Okay. You have to also remit for social security. In Nigeria, we actually have social securities for our staff, but I doubt, I don't know how the whole thing works. Social securities, maybe we have to get someone from National Social Insurance whatsoever to come and tell us more about that. But you need that certificate. You need your NSITF certificate to be able to bid for national contracts, for state contracts, for local government contracts. And then you need also ITF, Industrial Training Fund. Now, some of us here might be privileged to have our companies pay for our training, but some of us pay for our training by ourselves. Now, it is by law expected that organizations should make reservations for staff training. Staff training. So if you're actually training your staff, there should be a provision made for them for industry. That's ITF, made for ITF. Then when you go to ITF, you have to pay a particular token, and then they will give you your ITF clearance certificate to show that, yes, you are building the capacity of your staff. Now, if you finish with that place, if you have anything to do with IT, if your company is an IT-based company, then you go to NITDA to get the NITDA certification. That's National Institute for Training, National, what they call it again? Is it National Institute for Training and Development Agency? National Information Training and Development Agency. I hope I'm right, but it's NITDA, NITDA. In Nigeria as a case. So if you have anything to do with information communication or the likes, you have to go and get NITDA clearance. And all of these things, as simple as they are all needed for your contract, for you to be able to bid for a contract. Then you also need what we call, please, this one I'm going to say, take it very seriously, very, very seriously. Some of us are not good with annual returns and financial audits, annual financial audits. If you're a company here, already existing company, please take this very seriously. Go and find out, do your company do annual returns to CAC? because you need CAC annual returns clearance certificate to also be able to bid for a contract. And then, apart from the annual returns clearance certificate, which most often is just dependent on your company shares, okay? You are charged based on your company shares. It can be 2,000, it can be 5,000, 2,000 for 1 million capital shares, 5,000 for more than 1 million, and then it decreases in that order. So every year you're expected to pay some kind of returns, all right? Now, if you don't do those things, you cannot get to bid, all right? Then you also need your company financial audited report, financial audited report, okay? The essence of that financial audited report is to find out if your tax clearance, before they give you tax clearance, they'll find out whether what you're profiling is equivalent to what their own record is saying, okay? Because Federal Inland Revenue Service, they have the right to go to the bank and request for your bank statement as a company to find out whether what you're reporting on your financial audit is the same as what they are seeing from your statement of account. All right? Okay, so all of these documents are very, very important. And in this present dispensation, if you're registering a company, please make sure from your day one, okay, now if you register a company, automatically you get your TIN, that's identification number. Now from day one, make sure you are servicing your tax. Some of us that for 5 years we felt like it wasn't anything, does not concern us. Now we are regretting it, yes. Some of us that have our own personal companies, now we are regretting it because what we are supposed to have paid maybe 200 naira as annual return, now we are expected to pay maybe 20,000 as annual return with penalties. Tax you're supposed to pay, maybe you're not even supposed to pay tax because you did not make up to 25 million, all right? But because you did not declare your tax level, you are now paying penalties for the fact that you did not declare tax, and you did not pay tax, or you did not declare your financial report for 5 years. So they are charging you for 5 years of not paying those things, okay? And then Pencom is a wonderful place. You did not pay your staff, you did not remit your staff pension for 5 years. You should be counting more than 500,000 to pay. All right, so it's important. It's also important that we get these things and then be ready for opportunities, okay? Be ready for opportunities. Then for those of us here that are working in ministries and you wish to, or working with MDAs, and you wish to partner with some of us that are organizations, you can help provide us with the necessary OPAs needed, all the standards, all the clearance and all of that we need to get so that we can be ready at all time. Anytime you call us, we provide that, and then it'll be easier off. All right? Okay, so if you're still with me in this class, please type yes in the chat room. If you're not, please type no in the chat room. If you're still with me in this class, type yes. If what I'm saying is making any sense to you, type yes in the chat room. If it is not, please type no. Okay? All right. So thank you. Now, please, for those of us that are already in ministries, we are not saying you should mention your ministry, right? But there are contracts that your ministry offer. Now, are there things peculiar to your ministry that you think, okay, there are other documents that we might consider? Are there things that you think should be they are peculiar to your ministry or to your agency that you think, okay, if you're coming into this kind of agency, then this document also should be necessary to get that clearance or the other? All right, I have a hand up. Please, Engineer Gospel, kindly omit, let's hear from you. Engineer Gospel, are you there? Your mic is open, sir. Okay, maybe your network is fluctuating. Maybe you have to put your question or recommendation in the chat room so that we can all read it. So sorry about that, sir. Okay, so for those of us, you think there is something peculiar about your organization we should be aware of as contracts are consigned, maybe some documents we need to put into place. Please, you can help us put them in the chat room. If there are ones we are omitting, you can help us put them in the chat room so that we can all be aware. You don't need to mention your organization. You don't need to mention your ministry. Just tell us the one you think we should also consider, all right? From your own organization point of view. All right. Still on key concept, a contract should state clearly the deliverables and results expected, including any knowledge transfer from the seller to the buyer. Anything not in the contract cannot be legally enforced. When working internationally, project managers should keep in mind the effect that culture and local law have upon contracts and their enforceability, no matter how clearly a contract is written. So we should put in mind local laws, national laws, international laws as we carry out projects. A purchasing contract includes terms and conditions and may incorporate other buyer specifics as to what the seller is to perform or provide. It is the project management team's responsibility to make certain that all procurement meet the specific needs of the project while working with the procurement office to ensure organizational procurement policies are followed. Depending on the application level, an agreement can be a contract, a service level agreement, an understanding, an MOA, that's a memorandum of agreement, or a purchase order. Most organizations document policies and procedures specifically defining procurement rules and specifying who has authority to sign and administer such agreement on behalf of the organization. Across the world, organizations use different names for departments or divisions that deal with procurement, such as purchasing, contracting, procurement, or acquisitions. However, the responsibilities are likely to be similar. Although all project documents may be subject to some form of review and approval, the legal binding nature of a contract means it will be subjected to a more extensive approval process, often involving the legal department. I've said that before. In the contract world, lawyers are very much important in this case. And that's why when we talk about project management training, we always try to get lawyers to be part of this training. Some of them don't still understand their place when it comes to managing projects. Okay, some lawyers still don't understand their place. All right. So when we talk about service level agreements, memorandum, they just write it as every other normal way of writing it, but they don't understand it in the perspective of project, and they don't even know how to administer it in the perspective of projects. So we need more legal practitioners being certified as project management professionals. Okay. In all cases, the primary focus of the review and approval process is to ensure that the contract adequately describes the product, services, or results that the seller is agreeing to provide while being in compliance. Please note that before we talk about giving any contract, there must be total compliance with the laws and regulations regarding procurement. All right. These sessions are often separate appendices or annexes, allowing standardized legal contract language to be used. Now, apart from those documents that we get, some of the contracts, especially government-based contracts, whether local, national, or state levels, some of those contracts, you pay to apply. You pay some non-refundable fees to be qualified to apply. So you have the contract application fees, which is one of the ways that companies use to raise money. All right, that you spend money to apply does not mean that automatically you will be appointed. Okay, and most often contract fees could be from 5,000 to 10,000 to 50,000. Things so far so good I've seen is 1 million, dependent on the volume of money involved. Okay, for contracts there are maybe still within 10 million, 4, 5, 10 million. You could get contract fees of 10,000 naira. But as soon as you start getting to 500 million, your contract fee also increases. You start talking about billions, your contract fee also increases. All right. Okay. A complex project may involve managing multiple contracts simultaneously or in sequence. In such cases, each contract lifecycle may begin and end during any phase of the project lifecycle. The buyer-seller relationship may exist at many levels on any one project and between organizations, internal to and external to the acquiring organization. Depending on the application area, the seller may be identified as a contractor, vendor, service provider, or supplier. These are some of the names that are generally referred to as contractors. So you can call them contractors, especially when it comes to engineering. We always refer to most engineering work. The ones that are outsourced, we call the people handling them contractors. Then when it comes to things like events, food, and all of that, we call them vendors. Then when it comes to things like consulting, training, empowerment programs, we call them service providers. Then when it comes to technical procurement, like purchase of equipment and all of that, we call them suppliers. But all of them mean the same thing, all right? The buyer may be the owner of the final product, a subcontractor, the acquiring organization, a service requester, or the purchaser. The seller can be viewed during the contract life cycle first as a bidder, then as the selected source, and then as the contracted supplier or vendor. So a seller has different names at different stages of the contract. First, he happens to be a bidder. Then the second, if he wins the bid, he becomes the selected source. If he gets the award letter, he becomes the contracted supplier or the vendor. It is only at the contracted supplier or vendor level that he begins to get the money allocated for the contracts being released to his account or the company's account for the project. Okay, the winning bidder may manage the project, the work as a project. In such cases, the buyer becomes the customer to the subcontractors, suppliers, and service providers, and therefore a key project stakeholder from the seller's perspective. That's the buyer now. The seller or the seller's project management team may be concerned with all the processes involved in performing work or providing the services. Terms and conditions of the contract and the procurement statement of work become key inputs to many of the seller's management process. Remember, statement of work, when it comes to procurement, is referred to as terms of reference. Terms of reference. Statement of work, SOW. When in procurement term, we basically refer to it as terms of reference. All right. The contract can actually contain the input, example, major deliverables, key milestones, cost deliverables, or it can limit the project team's options. For example, buyer approval of staffing decision is often required on IT integration projects. The procurement statement of work may have other names, such as the technical statement of work, and like I said, terms of reference. The seller itself may become a buyer of lower tiered products, services, and materials from subcontractors or suppliers. Now, what this means is that even with the fact that you've been contracted this project, that does not mean that everything must be done by you. So you have subcontractors who can be subcontracted from you, and then you have subcontractors, all right? We have issues like that dependent on the complexity of the project. You can have subcontractors, you have subcontractors, you have subcontractors. So you have sellers. If I am a supplier now, or perhaps if I am the seller, I'm the contractor to a project, and then I subcontract part of the project to another subcontractor. In that case, I become a buyer from the subcontractor. The subcontractor becomes my supplier and I become the buyer. Now, if the subcontractor goes ahead to subcontract the project to another subcontractor, the subcontractor becomes a buyer or sub-buyer in this case to the subcontractor. I now become a final buyer from the sub-buyer. Do you get what? Do you get the whole sequence? Do you get what I'm trying to say? Please, if you understand all of this I'm trying to say, please type 11 in the chat room. If you don't understand it, I can go ahead and explain it. If you understand what I'm trying to say, in a case where the contractor becomes the buyer, and then he may end up subcontracting again to another person, and then the person that he initially subcontracted become a buyer to the last subcontractor. Okay? If you understood this case, please type 11 in the chat room. If you did not understand it, please type 00. I will go ahead and explain it. Okay. So Dicky said end user is also sometimes used. Yes. Yes. To avoid the case of buyer, sub-buyer, buyer, we can use end user. Okay, that's the ultimate buyer. Okay. Okay. Now let's proceed. In this section, it is assumed that the buyer of an item for the project is assigned to the project team and or is part of the larger organization. The seller is assumed to be providing services and or materials to the project and is usually outside the performing organization. For some projects, the seller role may be filled by a group or function that is part of the performing organization but external to the project. For larger projects, more complex projects, the seller may become a part of an integral project team after the contract is awarded. For smaller organizations or startup companies and those without a purchasing, contracting, or procurement department, the project manager may assume the purchasing authority role to negotiate and sign contracts directly, which becomes a decentralized purchasing. For more mature organizations, the actual procurement and contracting functions will be carried out by a separate department with a specific role to purchase, negotiate, and sign contracts, which is a centralized purchasing. In international contracting, the legal jurisdictions under which the contract will be administered are clearly spelled out in the contract. In most cases, the seller is an external contractor who is bound by formal contractual agreement. So we've looked at the local levels, we've looked at organizational levels, we've looked at local levels, national, state levels, national levels, and then we are looking at international levels, all right? So whichever one you want to do, if you're going for international projects, there are standards that must be met. Some of those standards are ISO standards, International Standard Organization, or International Organization for Standardization. They have some standards, some certifications that must be issued to organizations for them to be able to apply for certain international contracts. So if you are looking at international domain, you may also begin to search out for ISO standards for international contracts, and then how to get those certifications or accreditations, right? Now, as we work towards taking a break, trends and emerging practices in procurement management. There are a number of major trends in software tools, risk processes, logistics, and technology with different industries that can affect the success rate of projects. These trends, they include all of these following, but are not limited to advances in tools, like we said, the software, the apps that are being used. Then you have the more advanced risk management approaches, changing contracting processes, of course. The contracting process, there are things that before now they weren't necessary, but now they've become necessary. They have been enforced by law. Some years ago, if you needed to go for federal contracting, some of us didn't need ITF clearance or even tax clearance. But now those things have been enforced by law. All right, that you just need to get them before you start looking at national contracts or contracts affecting government or multinationals. Okay. Even when you're going to do contracts for some organizations, some mature organizations, they ask you for your VAT clearance and your tax clearance. And some of them ask for PEN code. Okay. Technology and, okay, so we have logistics and supply chain management. This particular point is very, very important, especially for those of us that deal with things that are perishable in procurement process. I was taking a project management class some time ago. Was it in February or March? Yes, I think it was March. And this young man was telling me the story that his company was facing. And we were looking at this whole contract thing. Okay. In fact, they came to that class to find a way to salvage the issue they were into. Now, what was the challenge? They said they had a contract to supply to an NGO. They said they needed to supply 16,000 matured birds, 16,000 broiler birds to a particular NGO. And then they are here in Abuja. Now they were to source for these beds from different parts of the country. And luckily, the majority of the beds, they got it from Lagos. They said they got about 4,000 beds from Lagos. And then they got about 4,000 beds from Yobe. Am I true, right? Yes, Yobe. Now, he said when they were doing the logistics, when they were moving them down to Abuja, from Lagos to he said from Lagos to, he actually said they've actually entered Abuja. From Lagos to Abuja, there was no casualty. None of the beds died. Now he said from Abuja to get to where they were to supply the beds, almost all the beds died. Almost all. He said out of the 4,000, they were not able to get 1,000 beds. He said they got about 800 beds that they delivered. So they only showed them the ones that were dead. But that is not part of the contract. The contract did not say if in the process that the beds die, we'll renegotiate it. That's not part of the contract. Now, he said the one from Yobe. No. He said they were supplying to Abuja and supplying to Yobe. Yes, I remember. So from Lagos, they picked another 4,000 to Yobe. He said they got to Yobe town, not a scratch was on the beds. But from Yobe to that particular local government, he said from Yobe to the local government was about 6 hours. From Yobe to that local government, almost all the whole beds died. So when it comes to procurement, logistics and supply chain need to be very, very effective if you don't want to start telling stories. In fact, that young man told me that while he was in that class, that he needed to raise 9 million to refund. He refunded about 9 million. He said the company sold about 3 cars. Within a space of 3 days, they sold about 3 cars to refund. And that's part of the legal obligations we are talking about when it comes to contract management. Nobody's willing to listen to you. You know, my wife was pregnant and this happened in the process, that happened. When we are coming back from Yobe, we were attacked by bandits. Kaduna was the worst case. Nobody will listen to you. The contract has been said, it has been said, agreement signed and sealed. If there is any deviation, you may have to bear it. Not that you may, you will have to bear it. So please pay attention to your logistics and supply chain. And this will help me tell you something. Please be careful on the kind of contract you take. You see those contracts that doesn't have high risks on logistics and supply, you can go ahead and pick those ones. Okay? I was training some times ago, long time ago, that was in my early days. I was training in Kano. And this young man was sharing his experience, a wonderful experience. Now, he has just received an invitation from a market in Lagos to supply them as many trailer loads of beans as possible. Listen, no, because some of us get to be, so somebody in this class may even be in this situation I'm talking about now. Now, he went to Kano and started buying beans. Okay, buying beans, plenty beans. So he was able to get at least 1 trailer load of beans, 1 trailer load of beans. And the amount they were calling for that 1 trailer then was in millions, big money. So he couldn't afford the whole money. So he started sourcing for contracts, subcontracts. And in the subcontract, they didn't ever envisage that anything will happen to the truck on the way. Amazing. Now, one of the people that this young man went and collected money from was someone who was just retired and his 18 million naira pension at the 18 million naira gratuity. He just gave to the young man. And then he transported the beans to Lagos, to that particular market. On getting to the market, the people now said, the market union now said that they never ordered for any beans. And the people that ordered the people that order the beans, that they cannot buy the beans from someone who is not registered with their union. And since they did not tell them that they were bringing beans, that they did not make any provision for them to sell. Just look at all of these risks. And they were trying to find a way to resolve this thing. My brethren was trying to find a way to resolve this thing. See rain. And you imagine Lagos rain. My 2 market rain. Oh my God. My God. That was how the man 18 million turned to story. And the other people, their money was turned to story. Now, how do you want to explain to them that you didn't sell the beans? Okay, even if you didn't sell the beans, the beans wasted. Was it part of the agreement? Now, importantly, I will say this again. If you're picking contracts, make sure that your logistics and supply chain are in order. If you don't have the capacity for logistics and supply chain for the contract you want to go into, then you can subcontract the logistics and supply chain part of your work to another organization that have the capacity to deal with that. And importantly, learn to ensure your logistics and supply chain contract. Very, very important. Learn to ensure it. Get insurance cover over them. All right. Someone is writing in the chat to me, said, DUNS number is also for internationally recognized companies. To obtain DUNS number, your company will have been pre-qualified to meet some criteria or standards. All right. So maybe in subsequent time, you could tell us how to get the DUNS number. All right. Then another important trait that we need to pay attention to is technology and stakeholder relations. Now, if you take a look at what happened to the beans man, one of the issues is the stakeholder relations. So some people just told him, oh man, there is opportunity for selling of beans in Lagos, just bring beans. And there was no involvement of the market union. There was no involvement of the buyers whenever they come. There was no arrangement. So that led to a very big issue. Then you have the trial engagement. Importantly, too, companies are beginning to use trial engagement as a means of testing for corporate integrity. Okay, integrity. So you bidded for a contract of 50 million and they gave you a contract of 5 million. Yes, they are trying to find out if you can you be trusted? Okay, so you have the trial engagement becoming much more rampant. Okay, even purchasing things online, we use trial engagement. You want to find out, okay, so they say the laptop online is 500,000 and offline is 900,000. So you say, okay, let me buy the laptop of 45,000 first. If they're able to deliver and it is exactly what they say, then I can upgrade to the one of 500,000. Trial engagement. Okay, trial engagement. There are people in this class that have, in fact, for any time we are doing a course they've not taken, they join our classes. But they started with trial engagement. They started with free trainings. They started with, let me find out if my organization will appreciate it. Then they went on to, okay, let me pay for manual. And then they went, okay, let me pay for examination. And then people started sharing their own experience. Oh, this thing is like it's working. And then some of them, I remember a particular person here who, I think he has taken about 5 courses with us. And he works with Central Bank. So he did his first course and then he submitted that particular certificate to the bank to find out if it will be accepted. As soon as they endorsed this, of course, Central Bank contacted us to be sure, are we the ones that issued the certificate, and all of the verification was done. As soon as the thing got approved, taking courses was never a problem to him again because somehow it was cheaper for him. Secondly, he feels there is quality in what he's learning. And thirdly, he feels like, okay, should there be need for verification, these people can be contacted. So there is always trial engagements. There's always what? Trial engagement, right? Trial engagement. Okay, let's proceed. Tailoring considerations. Because each project is unique, the project manager may need to tailor the way that the project procurement management process applied. Considerations for tailoring include, but are not limited to, complexity of procurement, physical location for procurement, governance and regulatory environment, and then availability of contractors. Considerations for agile and adaptive environment. In agile environment, specific sellers may be used to extend the team. Yes. Subcontract to this one will subcontract to that, to just extend the project team. This collaborative working relationship can lead to a shared risk procurement model where both the buyer and the seller share in the risk and the rewards associated with the project. Larger projects may use an adaptive approach for some deliverables and a more stable approach for other parts. In these cases, a governing agreement such as a master service agreement may be used for overall engagement, with the adaptive work being placed in an appendix or supplement. This allows changes to occur on the adaptive scope without impacting the overall contract. Now, on developing a master service agreement, it's important you have your lawyer, you have your professionals. So if you're going to get a certified project management professional, experienced project management professional, an accredited management accountant, consultant, and then some people like accredited auditors, accredited tax or licensed tax auditors, then chartered accountant. You can get these people to look at every part of the contract so that they can develop what we call the master service agreement. All right. All right, so before we proceed, can we just take a break? And then this class started by 12:30. We'll take a break, and then should we continue immediately or should we go for 1 hour break and return? Let me have your consent. Should we continue after 5 minutes break, or at introductory level, we've looked at project procurement and contract management. Now, moving forward, let's see what we have. Let's now quickly look at the project management procurement processes. And I would also like us to pay attention to this place, all right? Project management procurement processes. Project management procurement processes. The first process we have there is what we call plan procurement management. Plan procurement management. Plan procurement management. Plan procurement management is the process of documenting project procurement decisions, specifying the approach and identifying potential sellers. The key benefit of this process is that it determines whether to acquire goods and services from outside the project, and or if what to acquire, as well as how and when to acquire it. Goods and services may be procured from other parts of performing organization or from external sources. This process is performed once or at predefined points in the project. Now, when we look at the inputs, look at the tools and techniques, look at the outputs, there are some things I will want us to pay attention to. I may not really pay attention to inputs as much, but there are some things I will want us to pay attention to, and some of those things I want us to pay attention to rely on the tools and techniques. So on the input, we have the project charter, the business document like the business case, business benefit management plan. Then we have the project management plan where we'll talk about the scope management plan, quality management plan, resource management plan, scope baseline. Then we have the project documents where we'll talk about the milestone list, project team assignment, requirements documentation, requirements traceability matrix, resource requirement, risk register, stakeholder register. Then we have the enterprise environmental factors and organizational process assets. All of these ones stated here, we've been going through them over and over since the class began. But there are some things I will want to pay attention to in this class, and that will be much more on the tools and techniques and the outputs. I would like to pay attention on source selection analysis. I would like to pay attention on market research. I would like to pay attention on procurement strategy. I would like to pay attention to bid document. I would like to pay attention to contract types. And then that will be more of the place I would like to pay attention to. Now, I will read all of them generally, but in the explanation, I would like to pay attention to more of the specific areas I mentioned. So in the tools and technique, we have the expert judgment, data gathering, where we use market research, data analysis, where we use make or buy analysis. Then we have source selection criteria, then we have meetings. Then on the output, we have the procurement management plan, procurement strategy, bid document, procurement statement of work, source selection criteria, make or buy decision, independent cost estimate, change request, project documents update on, lessons learned register, milestone list, requirement documentation, requirements traceability matrix, risk register, stakeholder register, organizational process, asset update. Now, thank you. This is very wonderful, but there are some things I want to lay more emphasis on, all right, so that we can bring the information home. Defining roles and responsibilities related to procurement should be done early in the planned procurement management process. The manager should ensure that the project team is staffed with procurement expertise at the level required for the project. Now listen and listen well. That you're a project manager does not make you a procurement expert. Please listen. Listen. You are only studying procurement as part of what you're supposed to know as a project management professional. It doesn't make you a procurement expert. I hope we are together. Project management professional is not logistics and supply chain professional or procurement management professional. No, they are two different things, or they are all different things. Now, when you as a project manager has a project, it's important you secure the expertise of someone in procurement discipline. Very, very important. Very, very important. Some of us might not know about bidding, might not know about developing procurement budget, like talking about all of the statutory fees that should be paid. Some of us are not aware of it because by standard, we're expected to focus more on the process of procurement, not on the laws, not on the regulations governing procurement. For us as project managers, we should have the knowledge of what procurement is and the processes involved and how procurement is being done, but not the laws that apply to procurement, right? So we need a procurement expert, or if you wish, you can go for further training on procurement where you will learn about laws, okay? Where you will learn about laws. And like I said earlier, there are different laws governing different different projects, from local level to international level to all levels. All right. So if you really want to learn more about procurement, I would advise you take some workshops on procurement. By July 29th, I personally will be going for a workshop, a 10 days workshop on project planning, no, procurement planning and management. It's not, it's a professional development workshop, but it's not a professional certification. And at this point in my life, I think I need it very, very well and very, very urgent. So I'm going to be spending some 10 days outside of the comfort of my house with some good fees on my table to take that course, all right, or to take that workshop. So in the same way, I will encourage us. I've encouraged us in the morning to take some course on risk management. And now I'm encouraging us to take some course on procurement, all right? It will, the essence of taking the procurement courses or procurement workshop, you will learn more about logistics and supply chain, which in this particular context of what we're learning, we are not going into detail of logistics and supply chain, right? But if you're learning procurement, if you're going for a workshop on procurement, you will learn all of that, all right? Then you will learn about preparation of bidding document, the legal framework, local, state, and national framework and international framework for preparing bidding documents. In this class, it is not part of it. We can only talk generally on preparation of what bidding documents are, how to prepare them, But when that applies to different levels, that might be off the jurisdiction of this class. So I will also encourage, take a workshop, dependent on your financial capacity. Please take a workshop. Please, I said workshop, preferably an in-class workshop, preferably an in-class workshop, preferably I did not say go for a course. I said go for, there are two different things. I did not say go for a seminar. I did not say go for an online course on procurement. You can do all of those things, but I am specifically saying workshop, professional development workshop on procurement management. All right. I know why I'm stressing on workshop, not on online training or stressing on course on procurement, as it were. If you go to a workshop, you have the privilege of meeting professionals who are in the field doing those things, and they will tell you exactly how they apply. Okay. Not everybody that is teaching professional courses are actually in the field. Some of us are training consultants. Some of us are field consultants. Not every field consultant is a training consultant, and not every training consultant is a field consultant. So please, workshop is where the people in the field come to tell you how it is being done. So I'm advising us or recommending to us, go for physical in-class workshop, professional development workshop on procurement. You will learn so much about laws, regulations, standards, preparation of bidding documents. You may even have the opportunity of having those parastatals who do those bidding documents come to your workshop venue to tell you everything you need. All right. It may cost you a little money. Yep. Dependent on who is doing it or the organization that is doing it. You might spend from 100,000 and above, and dependent on the number of days also. If you're doing for a 3 days workshop, you might be spending 100,000. But if you're spending up to 10 days, you should be preparing for 300,000 and above. So hope that is not too much. Because if you're going for a contract of 1 billion, 300,000 shouldn't be too much for you to gather more knowledge to get it done, right? All right, thank you so much for listening to me. These responsibilities should be documented in the procurement management plan. Now let's proceed. I hope my slide is still visible to all. Hope my slide is still visible to all. Typical steps might be on planning procurement. Typical steps on planning procurement might be prepare the procurement statement of work or terms of reference, a high-level cost estimate to determine the budget, advertise the opportunity, identify a short list of qualified sellers, prepare and issue bid document, prepare and submit proposal by the seller, conduct a technical evaluation of the proposals, including quality, perform a cost evaluation of the proposals, prepare final combined quality and cost evaluation to select the winning proposal, then finalize negotiations and sign contract between the buyer and the seller. Now, basically, this is what procurement department or purchasing and supply department or acquisition department in organizations, this is actually what they do. Okay, in planning procurement, they are the ones that will define the complete process on the procurement, on how the procurement will go. All right. Okay. Now, quickly, let's look at contract types. Contract types. Now, when planning contracts or planning procurement, we need to consider contract types of contracts, and then be able to know which one we apply for the kind of contract we are going. Now, I'm going to give us a little example. Now, some award letters demand that you, the contractor, go and source for all the funds. After you have delivered the project, you get your fund, you get paid. That's a contract type. Then you have some other kind of contract types that will say, okay, we'll pay you 10% upfront award fee. Then you go source for all the money. When you're done, we'll pay you. Then you get others that will say, okay, we'll give you 70%. After you're done, we'll give you 30%. Then you also have those that are willing to give you 100% upfront. So all of these contract types they are all dependent on the kind of contract, the terms of contract or terms of reference on ground. I hope we're together. This is very, very important. So let's critically review the contract types, and then for those of us in contract department or procurement department, we can now be able to provide to suppliers or to sellers the kind of agreement or relationship we want to enter with them. If it is comfortable, they will definitely go ahead. If it is not comfortable, they will tell you, okay, this one is not really comfortable. We might not be able to do it. Then there could be a review. All legal contractual relationships generally fall into one of two broad families, either fixed price or cost reimbursable contracts. So we have fixed price contracts and cost reimbursable contracts. We also have the third one we call the time and material contract, which most often is used in HR practice. The more popular contract types in use are discussed in below as discrete type, but in practice, it is not unusual to combine one or more types in a single project. So you can have a situation where some part of the project will take firm fixed price, some other part will take cost reimbursable, some other part of the contract will take material and time and material. It all boils down to what you were able to negotiate out on the bidding table. All right. Now, the first one is what we call the fixed price contract. This category of contract involves setting a fixed total price for a defined product, service, or result to be provided. This contract should be used when the requirements are well defined and no significant changes to the scope are expected. Now, importantly, if you're taking a contract to be a firm fixed price, like the name implies, as far as nothing happens, nothing changed to the terms and conditions, you're expected to deliver to the project. Okay? Even if you took the contract money now and armed robbers took the money from you now, it doesn't change the contract. The price has been fixed and nothing was considered as a negotiating factor or other factors to prompt for negotiation. Even if you had signed the contract, is a fixed price contract, and then you use it to go and take chieftaincy title in the village, it doesn't change the contract. The chieftaincy you took does not consign the deliverables you are expected to deliver. So it's important when you are taking a firm fixed price contract, you don't calculate profit until you're done with the project. Listen to me very well. If you're taking a firm fixed price contract, you are not talking about profit until you are done with the project. It's only after you're done with the project that you can say, okay, oh, this is the profit. You cannot calculate your expenditure from the revenue that came, and then you can say, okay, this is the gross profit, and then you can deduct your income tax and then the employee tax, and then be able to have what is left. Listen and listen carefully. Before you take fixed price contract, or before you could agree on fixed price contract, please make sure that the terms and conditions are things you're conversant with, and then you're sure that there are things you can deliver irrespective of whatsoever thing that might happen. All right. If I am taking a training contract, I would prefer to take firm fixed price contract because I have all the parameters to calculate the cost of delivery, right? But if I'm taking a construction of maybe 10-story building, I will not take firm fixed price because things might change. Weather conditions, climatic changes, natural occurrences that may affect the project. I will not take firm fixed price as far as construction is concerned. I won't take that. But I could provide estimates that will guide the budget formulation. I hope we're together. Okay. So let's quickly look at some of the types of fixed price. We have the firm fixed price contract, which is the FFP. The most commonly used contract type is the FFP. It is favored by most buying organizations because the price of goods is set at the outset and not subject to change unless the scope of the work changes. So when you're taking the firm fixed price, it is the awarding organization or the contracting organization that get to benefit much. So whatever changes, it doesn't concern them. And please listen. I'm taking time to explain this thing because we get to face these things every day in the field. When you're taking firm fixed price contract, look at the scope of the contract very well. Look at the scope of the project. If there are ones you will tell the awarding organization to sublet to other organization, please feel free to tell them. Let's take, for instance, you have done your feasibility, and from your feasibility, let's assume you're constructing a school, okay? You're constructing administrative quarters, hostels, classrooms, stadium, all the civil work, you're doing it. And then from your report, they said you should check out for borehole, you should check out for power, you should check out for some other things. And then from your feasibility, you've checked out. And the report for borehole says that the budget, the estimated budget for borehole could be 2.5 million or say 3 million based on the environment. And then the organization now comes to tell you, oh, you know, since we've given you this other contract, why don't you take it like this? Why don't you do it at 1 million and all of that? Please feel free to tell them, okay, you know, based on what I'm doing, I will actually appreciate if we focus on this area so that we can deliver. And then you can subcontract this one. Let them have another fresh contractor to deal with that. So that you don't have, some of us have this mindset of let me gather it all. You don't have to gather it all. Quality and excellence cannot be jeopardized as far as project is concerned. And that those are people that are telling you, we've given you this contract, now why don't you take this one? When you don't deliver, that's why they will tell you that we agreed on 1.5 and you said you will do it. And then you have to vomit the money and find a way to deliver the project. So please, look at the scope of the project. Find your core competencies around the scope of the project and take up firm-fixed contracts on those areas. Now, those areas that you are not completely definite about, you can decide to deal with them discreetly. You negotiate with them completely different. If the company feels like, okay, we won't be able to handle, we won't be able to do it at your own terms, go ahead and ask them to contract it to another organization. You mustn't be the one to do it. Then another one is the firm-fixed, the fixed price incentive fee. This fixed price arrangement gives the buyer and seller some flexibility in that it allows for deviation from performance with financial incentives tied to achieving agreed upon metrics. Typically, such financial incentives are related to cost schedule or technical performance of the seller. Under FPIF contract, price ceiling is set and all costs above the price ceiling are the responsibility of the seller. But we want you to do this. Maybe we wanted you a project of 5 months. We now want you to do it. Okay, if you can do this in a project of 5 months that will cost you 5 million. When I say, okay, no, 5 months, 5 million is too small. 5 months, 200 million, better off. 5 months for 300, it's not small. 5 months for 1 billion, better. 5 months for 1 billion. Yes, you have a contract of 5 months for 1 billion. And then they are saying, okay, if you're able to finish this project in 3 months, we will give you some incentive of maybe 300 million. And you don't want to lose that. You may need to mobilize resources at higher rates to finish that particular contract. But remember, the firm fixed price contract is 1 billion. If you go and do the project in 3 months and you do not still meet up the standards, that incentive fee is not compulsory that they must pay it to you, because the incentive fee can only be paid if the agreed upon requirements are met. So before you start taking up incentive, please be sure that you can meet up with the terms and conditions for which the incentive will be delivered. I hope we are on the same page. Please, if we are still together, can you type 1 in the chat room? If we are still together, can you please type 1 in the chat room before I move on? If we are still together, please type 1 in the chat room. Okay. Okay. Fixed price with economic price adjustment. Please read it very well. It is, this type is used whenever the seller's performance period spans a considerable period of years, or if payments are made in a different currency. All right. It is a fixed price contract, but with a special provision allowing for predefined final adjustment to the contract type due to change conditions such as inflation changes or cost increases or decreases for specific commodities. So once again, let me have the next type of contract we'll look at is the cost reimbursable contract. Now let's still keep in view the contract we already have at hand. And then we'll look at cost reimbursable, we'll look at the different types of cost reimbursable contract, and then we'll now decide whether we want to do fixed price contracts at the type we've chosen, or we want to do cost reimbursable at another category, we will choose. All right? Okay, so let's proceed. Cost reimbursable contract. This category of contract involves payments, cost reimbursement to the seller for all legitimate actual costs incurred for completed work plus a fee representing the seller's profit. This type should be used if the scope of the work is expected to change significantly during execution of the contract. Listen to this. If you're using cost reimbursable, you provide your contract budget, and then there is a fee, an attachment of fee for the work you're doing. So it's somehow expected that you're not benefiting from the procurement, as it were, or from the contract. You're only benefiting from the service charge or the service fee you're putting on. Now, in the process of executing the project, all the actual incurred costs in the contract will be reimbursed. But for the actual fee, there is no change to it. Sorry, the service fee or the service charge, there is no change to it. But the actual cost incurred while executing the project will be paid. So let's take, for instance, you are given a contract of 1 billion, and then your service charge is 500,000, presumably. And then you are asked to go and source for the fund. And then as part of the legal requirement, they said all other costs incurred, all other actual costs incurred will be reimbursed. That means outside of the 1 billion, if you incur any other cost that is approved, please listen, because this is very, very important. Before you incur a cost, please make sure that it is approved. Make sure it is approved. Make sure it is what? Approved. Make sure it is approved before you incur any cost, so that we will not think that, oh, because it's cost reimbursable, we'll not go and start incurring costs unnecessary. Even in our family now, there are things our wives and husbands will do. We'll tell them, this one, you're on your own. You didn't tell me. I didn't plan for it. They say, but it's for the children. I say, yes, it's for the children. The children is for all of us. So for this one, you took the initiative and did. Please, bear the cost. I will bear the cost for another one. Right? So we should be careful on the use of cost reimbursable contracts. All right? Okay, moving forward, types of cost reimbursable contracts. We have the cost plus fixed fee, CPFF. The seller is reimbursed for all allowable costs for performing the contract work and receives a fixed fee payment calculated as a percentage of the initial estimated project cost. Fee amounts do not change unless the project scope changes. Your fee amount, the fee you're charging, it doesn't change except the scope. The service charge, like I said, the service fee does not change except the scope of the project changes. But the cost of the project might change, all right, based on other factors. Then the second one is cost plus incentive fee. The seller is reimbursed for all allowable costs for performing the contract work and receives a predetermined incentive fee based on achieving certain performance objectives as set forth in the contract. In CPIF contract, if the final costs are less or greater than the original estimated cost, then both the buyer and seller share costs from the departures based upon a pre-negotiated cost-sharing formula. For example, an 80-20 split over 80-20 split over or under target cost based on actual performance of the seller. Then you have cost plus award fee. The seller is reimbursed for all legitimate costs, but the majority of the fee is earned based on the satisfaction of certain broad subjective performance criteria that are defined and incorporated in the contract. The determination of fee is based solely on the subjective determination of seller performance by the buyer and is generally not subject to appeals. So whatever thing they agree to pay you, that's what they pay you based on performance. Okay, your cost is there, but based on performance, they decide on what to pay you. All right. Okay. Now, first of all, from the case study contracts that we already have, the Ondo State Snary Farm, do you think you want to take fixed price contracts negotiations or cost reimbursables? So if fixed price, please write FP. If cost reimbursable, write CR. So which one do you think should be your best option? FP or CR? Okay, so someone says FP. I'm still paying attention to the chat room. For professional services, delivery methods include buyer service provider, buyer/services provider with no subcontracting, buyer and services provider with subcontracting allowed, joint venture between buyer and services provider, and buyer/service provider acts as the representative. This is for professional services. Now, for industrial or commercial construction, project delivery methods include but not limited to turnkey. Turnkey is a situation where you've already produced and the person is buying, like going to buy already built house in an estate. That's a turnkey. Then you have project delivery. You have design build. Okay, you design, accepted, and then you build. They have design, bid, and build. You design, you bid for the design, and then approved, then you build. Then you have design, build, and operate. You designed it, you bidded it, it was given to you, you built it, and it was approved for you to operate it. Like some of us that build plazas, you designed the plaza, you went for stakeholders to approve the plaza, they sponsored it, and you're also required to manage the operations of the plaza. That's design, build, operate. Then build, own, operate, transfer. So you can build, you can own, and then transfer. And then there are others. Okay, there are other approaches on the delivery side of the game. Then you have number 2, contract payment types. Part of the strategies you need to consider in contract payment types. Contract payment types are separate from the project delivery methods and are coordinated with the buying organization's internal financial systems. They include but are not limited to these contract types plus variations. You have the lump sum, you have the fixed price, firm fixed price, you have the cost plus award fee, cost plus incentive fee, time and materials, target cost, and others. So when you're paying, you decide which one to pay. Fixed price contracts are suitable when the type of contract is predictable and the requirements are well defined and not likely to change. Cost plus contracts are suitable when the work is evolving, likely to change, or not well defined. Then we have incentives and awards may be used to align the objectives of the buyer and seller. Then you have number 3, still under contract strategy, things to be considered, procurement phases. The procurement strategy can also include information on procurement phases. Information may include sequencing or phasing of the procurement, a description of each phase and the specific objective of each phase, procurement performance indicators and milestones to be used in monitoring, then criteria for moving from phase to phase, the monitoring and evaluation plan for tracking progress, and then process for knowledge transfer for use in subsequent phases. Bid documents. Bid documents. Bid documents are used to solicit proposals from prospective sellers. Terms such as bid, tender, or quotation are generally used when the seller selection decision is based on price, as when buying commercial or standard items. While a term such as proposal is generally used when other considerations such as technical capability or technical approach are the most important. The next break we are going to go on, we'll be returning by 5. And then in the last class, we'll be looking at proposal writing, project proposal writing. Please, that will be very, very important. And we'll encourage everyone to be on ground. Project proposal writing. That will be the last part of this class, project proposal writing. Specific procurement terminology used may vary by industry and location of the procurement. Depending on the goods or services needed, the bidding document can include a request for information, request for quotation, request for proposal, or other appropriate documents, appropriate procurement documents. Now we have request for information, RFI, and RFI is used when more information on the goods and services to be acquired is needed from the sellers. It will typically be followed by a request for quotation and request for proposal. Then we have the RFQ, request for quotation, and RFQ is commonly used when more information is needed on how vendors would satisfy the requirements and or how much it will cost. Then you have a request for proposal, RFP, and RFP is used when there is a problem in the project and the solution is not easy to determine. This is the most formal of the request for documents and has strict procurement rules for content, timeline, and seller responses. And that's why we are going to pay some sort of attention on drafting requests for proposals or drafting proposals. The buyer structures procurement documents to facilitate an accurate and complete response from each prospective seller and to facilitate easy evaluation of the responses. These documents include a description of the desired form of the response, the relevant procurement statement of work, and any required contractual provisions. The complexity and level of detail of the procurement document should be consistent with the value of and risks associated with the planned procurement. Procurement documents are required to be sufficiently detailed to ensure consistent, appropriate responses, but flexible enough to allow consideration of any seller suggestions for better ways to satisfy the same objective. Okay, so we are going to be taking a break from here. We've moved this class from 12:30 to 2 o'clock, so that's been a very long time. And I think it's good we take a very good break.